enjoy this content, if you like it, please think to tap the like button below, subscribe, and share this video with people that you would think would be interested. With that out the way, let's get to it. Here's another thing. So I'm gonna wheel it back. As I grew up, I wasn't exposed to a lot of ways to make money grow.
Oh, absolutely.
And it's just because the environment I was in, they just didn't have that kind of knowledge. And those who did have that knowledge, they kind of, I would say, kept it under their roof.
Absolutely.
So, and one of those vehicles that people talk about a lot is life insurance. And the average, I would say the average person that I come across in my personal network, they typically look at it as a means for if you pass away so that it won't create a big struggle on your family. But I've also learned that there are multiple other ones that you can use for other benefits. So the one I want to talk about, which is something that's new to me, is an IUL.
Okay.
So what I'm curious is like, what is it? And for those who don't know, what that stands for is an Indexed Universal Life Insurance Policy. And so with that is like, what is it? And the second thing is what are a few of the benefits and the downsides of that? Maybe just a couple, not a whole lot, that you can offer.
Yeah, so Indexed Universal Life is a policy that's a permanent policy, and that's what you want to strive to get. A lot of people hear about term policies. And term is exactly what it is. Term, for a certain period of time, and that's the monies that you receive in the event of your passing. Your beneficiaries will receive that amount. But after that period is up, then that life insurance policy is either over or you continue to pay, but the amount of money that you pay is probably 4 to 5 times the amount of money that you were paying while it was over that term. Now, the Indexed Universal Life is a universal life policy that pays as a permanent policy and gains cash value over the period of your life. So, for instance, if you're 30 years old and you get an IUL and you set up a death benefit policy of $100,000, it can go up to $100,000 on top of the death benefit of $100,000, so you have $200,000 in the event of your passing to pass on to loved ones or to set up in an event if you have a business as a beneficiary and things of that nature. What I always like to suggest is look at and talk to your life insurance agent and look at the IUL and see, can you narrow that gap? So in other words, who wants to pay for a life insurance policy at 90 years old?
Right.
You want to try and narrow that down to maybe pay it for 20 years. Look at a VUL, a variable universal life.
Okay.
And that gets invested in the stock market, and that portion that gets invested in the stock market gains value. I always suggest people to do a 20 to a 30-year life cycle, and they pay for that period of time, and you'll see the value grow, and then you stop. And you're still gaining value as you're living, and that policy is gaining, and then you can borrow from it, which a lot of people like to do.
Right. So in your discussion, you basically gave all the benefits. There has to be some downsides. Like, so one thing that I realized is that with the IUL, they are not bound by the stock market, the highs and the lows of it, which makes it feel more advantageous. Where the variable one, the one you mentioned, you can fall victim and you can see your money go up and it can go down. And if you're just like the average person who has a lot going on, you're not really on top of that. So going back to the IUL, what are some of the downsides?
Yeah, as I was mentioning, you pay over the entire life of yourself. So you may be at 90 years old making a life insurance payment with no income.
Right.
So the only income that you may have for some people is Social Security. Some people may have fixed income at Social Security and their retirements. So they're still trying to make a life insurance payment to maintain that life insurance, because if they don't, then that policy eats into your face value, which decreases the amount of death benefit that you have. So that gain that you've gained to $100,000, when you can't make any more of the life insurance policy payments, it starts to eat away at that. So now your value of your policy starts to decrease. So that's a downside to it.
Right. So, but are you saying that's basically the only that you realize up to this point?
Most of the time, that's the only payments, is just to make sure.
That's just keeping that payment up.
Keeping that payment, because that payment is higher than a term policy.
What would be an example?
So, example, on a term policy, I've seen people who get a $500,000 term policy for $45 a month.
Okay.
That same policy for IUL may run 200 and something dollars.
Whew.
So it's permanent.
Yeah.
So it's going to gain the value.
Right.
So before you go out and start getting insurances and things of that nature, make sure you're looking at your finances from the business and or personal standpoint. That you have the ability to be able to make those payments, and that you have the ability that it will not cause an undue burden to you or your monthly income and expenses.
Okay. I like it. Yeah.